Hi, everybody. Scott Riley, the Market Update Desk, coming at you from the opening of Cabana season in the Cabana office. We're really excited about that. Mr. Gibson's hanging out here. He may make an appearance in a little bit. He was busy crunching numbers this morning. Let's get right into it. Yesterday, the Fed came out and, as expected, held interest rates where they were. And during the Q&A session, we had some positive things happen. Chair Powell gave a much more dovish tone than hawkish tone and reiterated that they are announcing the slowdown of the runoff of treasuries from the balance sheet by half, which is fantastic news because that slows down some of the available supply of investment grade items that are in the market from the treasury. So that's good news. Now, the other thing they talked about is they're going to be starting to purchase treasuries starting next month, which is actually a touch before when we thought. And also they're going to purchase about $5 billion a month more than what we thought. So those are good things that the bond market took as a big positive, and we ended up in the green yesterday. And today, we're starting out the day not too bad. Some of it's clawed back a little bit, but we're not bad for the day considering everything. Today we had U.S. productivity and labor costs come out. For productivity, a little bit of a surprise. We were down quite substantially. So productivity grew 0.3%, but there was an expected 4.5% productivity increase. So what that decrease in productivity did, it actually drove up unit labor costs. The market was expecting a 0.3 increase for labor cost, and we got a little over 0.7 increase in labor cost. So that was a big concern. We've been seeing labor costs, we've been seeing material costs come in higher than expected, and that's being obviously the cause of much of the increase in products and services that we're seeing. A lot of the labor costs people just don't really follow is the back end cost of what the employers are paying, which are benefits. Insurance is up dramatically. So these costs aren't shown in people's wages and salaries, but they are a substantial part that people have to understand of labor cost. So we're having that come in today, which is a concerning overtone from wage pressure, price pressure, which of course leads to inflationary numbers. Challenger jobs cut also came out this morning, showed companies are planning to hire 9,802 workers in April. This was the lowest level since April of last year. So we see conflicting data with the BLS and real market data, not imputed data. In fact, while we're talking about that, jobless claims came in at 208,000 for initial claims, and continuing claims came in at exactly the same amount as last week. Statistically impossible. So many economists and people that are following these numbers are so up in arms about what is coming out of the BLS because it's blatant. They're not even trying to hide anything now. That it is a statistical improbability that we would get the initial claims where we are basically the same for 8 weeks, and week over week continuing claims being exactly the same. That is tougher odds to have than winning the lottery. So there is so much going on with the BLS that they are losing all confidence in the market. And unfortunately, there is a lot of political overtones to it. So we're going to continue to watch that. Now, going into tomorrow, we have the very important BLS jobs report. It's actually forecasted to be a very strong report at 242,000 jobs. Now, that's a pretty strong one. We're a little concerned because the sample week that's used within the BLS did have some concerns that we might show stronger than expected job growth. And also, these jobless claims for initial and continuing claims will impact some of the BLS report. Now, when we look at the ADP report, it only showed 38,000 jobs created from small businesses. But we all know the BLS report uses an imputed birth death model for small business formations and sunsets. So there's a lot of concern of what's going to come out tomorrow. And we think it's going to be a hotter than expected jobs report. And of course, those will not be from full-time jobs. They're going to be an imputed birth death model and part-time jobs and multiple job holders. This could definitely bring the market the opposite way of what we're getting today. So let's pay real close attention. Starting tomorrow, when we get those job numbers, we're going to get those out to you. And we're paying close attention to the 10-year bond today and the mortgage-backed securities. Give us a call with any questions, 616-293-2189. Have a great day.